right, good morning, everyone. Today is January 5th, 2022, and it's a new year. Happy New Year. Hope everybody had a good holiday season. I took the past couple weeks off from the show because I was busy doing stuff. Obviously, right around Christmas time, and then I had something I had to take care of last Wednesday, but here we are in a brand new year, and it's starting off relatively interesting. The market itself has been kind of weird, to be honest with you. It's typically weird around the holidays anyway, especially right around Christmas and New Year. It gets kind of thin, and there's a lot of end of year positioning and different things. But I'll tell you what's really odd these days, or here lately, especially starting this week and starting the new year, is how the markets are. Like, the Dow was up yesterday and the Nasdaq was down significantly, and there's a lot of bifurcation in the market where, and I guess the what's the phrase I'm looking for? The conventional wisdom is that interest rates are going up, which they have been. Interest rates actually going up a little bit, but the Fed's going to raise rates, and that's bad for the tech stocks. And of course, we got into a period of time where there was lots of stocks selling for like crazy multiples of sales and that type of thing. So anyway, I think in the new year here, everyone is sort of jockeying for position, and I think I read somewhere where yesterday was one of the biggest days for value stock type stocks outperforming growth stocks. And so the tech stocks are a little sketchy. I think it was financials and energy doing real well and that type of thing. So, but here's the thing: every new year is kind of a fresh start for everybody, and so I've noticed that the market has just been kind of choppy, and it seems like erratic over I'd say the past week all the way up until this morning. It's just been kind of erratic. So I think next week maybe things will settle in a little bit. Um, I did find this interesting graph of annual returns. Every year JP Morgan puts out this graph, and for whatever reason I always find it extremely fascinating, because what it shows, how the previous year did, and then what the max drawdown was, right? And what was amazing about last year, and what's actually amazing about this, every time I look at this, which is usually like once a year, it comes out in January. Look at how many years the max drawdown was like less than 10%. And this goes all the way back to 1980, right? Let's see. Um, Average intra-year drops, it says 14%. Annual returns were positive in the 32 of 42 years. So that's pretty amazing. But more amazingly is that the biggest drawdown last year was only 5%. If you think about, in the middle of a pandemic and all the crazy stuff going on in the world and that, it's incredible that the S&P had a max pullback of 5% off of, whatever the high was. And so obviously look at the year before that. That was 2020. 34%. That was the pandemic sell-off. Only 7% in 2019. Pretty amazing. And so, like I said, if you kind of go back through these years here and look at it, it's amazing to see the number of years where there wasn't even a 10% pullback, right? And of course, there's 2018. S&P ended down 6% that year. So, and you can see that the max drawdown that year was 20%, which is right at bear market territory. But anyway, fascinating graph. I'm sure you can find this out there on the internet somewhere if you look for it. And obviously, it puts things in a much larger perspective. Um, you know, assuming that it only goes back to 1980, but it's still fascinating to look at, and visually, I think it's probably one of the best. It's one of the best sort of visual representations, if you ask me, of longer term sort of market. Very, very cool. And I mean the returns, the positive year, the returns are simply amazing. So it really sort of hits home. Great chart. Um, so I thought I'd bring that to start with. Anyway, let's take a look at the S&P, which has, I think I've got a 1 year chart here, and the S&P has just been sort of rallying and rallying and rallying since the pandemic lows, and just recently we sort of reached a little congestion plateau area here. It'll be interesting to see which way it decides to go from here, right? Can't really see. Well, here, I'll pull it up so you can see it at the bottom of the chart here. The RSI, the RSI on the chart is still kind of neutral, right? In theory, you got a little bit of a negative divergence on the RSI happening, um, because back over here in November, you can see where the market, kind of peaked up here. Obviously, it had been trending up, and so that RSI kind of got a little bit overbought, and now the market's at a new high, but the RSI is still kind of flat. And just this past 2, 4, 6 days, 7 days if you include today, we're in sort of a little choppy consolidation pattern here, and that's what I meant when I said earlier the market's been acting kind of choppy and dull, which is to be expected around the holidays. So not a huge big deal. I think starting next week, I'm trying to get this chart to come back down. It doesn't want to. Oh, there we go. So starting next week, I think we'll get a little bit better idea of what the market actually wants to do. There we go. Let me get my chart all squared back away. There we go. So, this run up right here was pretty outrageous. Let's see, what were the dates on this? Whoop. I didn't mean to hit that. I meant to hit this. Okay, there we go. So that was 12/21. 12/22, 12/23. So that would have been right before Christmas Eve. So yeah, there was the right before Christmas and the day after Christmas, the trading session, I should say, after Christmas. That's where you got this humongous run up, just 4 days in a row, straight up, which is kind of interesting, to be honest with you, but it is what it is. And so with the market, with the S&P basically sitting at an all-time high here. But, of course, like I was saying before, everybody seems to be following ARK as a proxy for, how the tech stocks are doing. And I got to tell you, boy, it looks really rough, right? Looks really rough. And so, this is a proxy for tech stocks, new era type stocks, and it's looking pretty rough, to be honest with you. It was down significantly, and of course, with the S&P up significantly last year, this just goes to show that there's kind of a divergence in the market between a lot of stocks, and I was looking yesterday. They were talking about Peloton on CNBC, and there's so many stocks like this that basically they just had crazy run-ups and have come down significantly. This one more so than anything. The one that really also I find extremely interesting is the China Internet Etf, right? It's got like Alibaba and JD.com and all that. I mean, this thing is like probing below the pandemic lows. So that's a whole nother story there, but just fascinating to see the divergence. You know what it reminds me of is back in the dot-com days. To be honest with you, look at Alibaba here. Just incredible. The market cap that's been the market cap that's been wiped out. So you can see it peaked up here, well over 300 bucks, and now it's trading for 100 and a quarter. It's pretty amazing because I know this was sort of a Wall Street darling at some point, but China's always been a risky sort of proposition, and I don't know what's going on over there, but anyway, there's plenty of stocks like this. A lot of these, let's see, like just randomly. Well, that's not the one I was looking for. FS. A lot of these. Here we go. Tech stocks. Tech stocks that had just tremendous moves higher, parabolic type moves, and then a lot of them have. I guess this is just one that randomly came to mind. I remember when the at the beginning of 2021, the beginning of last year, like these EV stocks were super hot and just made tremendous moves. I guess what this is, in my opinion, looking at a lot of these charts, is sort of a reminder that when you have a stock that goes crazy to the upside and has a humongous run up for whatever reason, it's not a bad idea to take some profits, right? And I looked through tons and tons and tons of charts, and that's all I can think of is, people that took profits on some of these things along the way, probably are sitting okay, even if they held on, And it's another reason that like what we're doing here, where we're sort of scaling out, taking profits, sliding the stop up, is a pretty good strategy, for somewhat active trading, because see, Kramer was talking about this CRM. Oh yeah, there's a big gap down here. So taking profits, moving up stops, that type of thing, not holding over earnings are some of the strategies you can employ to assure that you're never holding the stock. This hood gets me too. This thing, just incredible. For the life of me, I can't. This thing IPO'd, right? It IPO'd, and then it had a couple of days where it hung around, and then this particular long range bar here was just insane, right? I can't even imagine what this was about, but look at that. I mean, even if that crazy bar wasn't there, and look at this IPO. What a disaster. And let's see, there's the Renaissance Ipo ETF is kind of interesting to look at because it's basically an ETF of all the companies that IPO'd. It's looking a little bit rough here, right? There was a lot of crazy. Well, in 2020, I mean that was pretty amazing, the move off of that low. But you can see that this IPOs didn't really have all that great of, I guess, an aggregate of a year last year, as you can see by this ETF. So this is kind of interesting to keep an eye on because, a lot of these IPOs just didn't, they hype them on CNBC and this and that. And this Coinbase one's kind of interesting to look at too, because it's, in theory, this was going to be some sort of a proxy for Bitcoin. And there's an IPO back there. I guess this little dot on the chart here I believe was the actual IPO price, and then you can see when it opened for trading what it did here, and it's been kind of a rough ride ever since. But um, it just goes to show you that buying and holding, other than the index, it just depends. Some stocks are going to work, some stocks aren't, but the problem with something like this is if you bought at the wrong time and just hold on, it can take a long, long time just to theoretically even get back to break even. So I wanted to look at AMD too. Chip stocks have had kind of a rough way to go here a little bit lately. So this is kind of an interesting chart. If I put a downward sloping trend line across these highs here, this could potentially set up again. AMD's a really good trading stock, so there we go. But the last time that we actually traded this thing, like back over here, and quite frankly, we closed it. The target was like here, but we closed it. It doesn't look like much because it just kept going and kept going, but the duration of this particular pullback here, it was from August to like literally October, right? And so what I think, and so you can see that the current pullback is starting to manifest in a similar fashion, right? Like where this trend line touches right here, it's kind of like this, and so anyway, my point is that something like this, this could take a long time to set up, but it might set up again. So let's look at the real quick before we get into the let's see, dollar sign SOX maybe. That's it. Semiconductor index, pretty amazing, right? I like that. Most of my charts, I find myself scrolling back to the pandemic lows to see the entirety of the move, and so it's getting a little choppy up here, but basically like right up at the highs and looking pretty good. So, all right, well, real quick here, let's take a look through the open trades. We just had CMRE trigger in here recently, and man, this is something about this chart. Like you go back here, and this is such a nice looking chart, and there's a couple things about it. One is, if you look at this little flag back here at the beginning of 2021, it's very similar to the setup right now. Only, obviously, the setup now is on sort of a bigger scale, longer duration, but it's got a very similar pattern. And I'm going to say that, and I thought I had a trend line drawn across these highs, but the duration of this pullback and pretty orderly, and so it came on the radar back over here, and then had a few fits and starts. But what's really nice about this is, and obviously it was on the pending list for all this time as it formed this sort of W pattern, right? And you guys that have been around for a while know that let me move this over. There we go. The W pattern, in my opinion, seems like it's one of the more powerful patterns out there, because in the past, you see a sell-off and then a bounce and then sort of another sell-off and a bounce, and typically when it clears the center of the W, you generally get a pretty decent move in the other direction. So this is looking really good here. I think it looks pretty good for continuation, and so far so good. I mean, this thing just triggered in a couple days ago, actually yesterday. It was like day before, Monday was the first close above the trigger since it hit the list. And I'm pretty sure the trigger price was higher back when it hit the list. I think it might have been in November, right? Or maybe it was it was definitely in November. It was back over here, and so things were looking a little sketchy back over here, but this is looking really good here. So So far, so good on this. The trailing stop on this is, right down here, 1175, and this is a little bit lower price stock than we usually deal in, but that pattern is very consistent. So the other one, well, let's see, I'll hit save chart. There we go. Johnson and Johnson, very similar sort of. I won't say similar, but it's a similar in that it has that W pattern, right? And as you guys recall, this is another one that took literally a couple months to actually trigger in, right? Like way back over here in like September, October, this one hit the pending list, and it spent. That was I believe this was the original trigger line. I'm not positive on that, but it spent a lot of time like sort of forming this pattern, and then you had these couple of days where it basically traded above the trigger but didn't close above it, then took one more dip down, and so you can see once it triggered in right over here that that it made a pretty big move straight away, came back and retested the area of the trigger, and so you got another sort of pivot low there. The nice thing about that is that the trailing stop moved up to basically to the entry, right? And so just below that pivot, so Johnson & Johnson looking really good here too. And this, of course, is, typically a fairly slow mover on a day-to-day basis. I think this thing doesn't move a whole lot percentage-wise on a day-to-day basis, but this pattern right here was sort of, always kind of choppy around the bottoms. There's a lot of spike lows. There's what looks like a lot of choppiness and volatility around the lows, but this has essentially got the same sort of W pattern working here, and it's headed in the right direction. So it's gunning for these previous highs right here, and so far so good. I'd say this trailing stop probably could move up a little bit to just under here, and so if the price begins to clear this previous high here, price starts getting up here, then I would imagine this trailing stop will start riding up this last little move higher. But right now, I mean, there's nothing better than being in a stock where you got your stop loss at break even, and so that's that. Stop loss at break even is because what's the worst that can happen, right? The worst that can happen is you didn't make anything or lose anything on it. So other than that, surprisingly enough, and I guess this is sort of a function of the market itself. I mean, the stocks that are down have just absolutely been crushed, and they're in downtrends, and the moving averages are sloping down, and they're technically pretty unhealthy looking. I've noticed a lot of people, trying to bottom fish. Speaking of bottom fishing, apparently Charlie Munger has some sort of newsletter or something he puts out each day, or some comments or something, and he was talking about Alibaba, right? And so hey, but here's the thing is like technically these kind of stocks that are in downtrends, they're below the moving averages. The moving averages are sloping down. We didn't set the system up, like the algo that drives the system is just not going to try and bottom fish. It's basically programmed to look for stocks that have pullbacks in uptrends and are, technically in at least a near term to medium term primary uptrend, right? And so there's a lot of stocks out there that that look really nasty like this and could easily, back to this hood, every time I look at this, I think to myself, wow, boy, if this thing can just break above 20, then you could probably get a pretty decent rally out of this. And so a couple days ago it looked like it was sort of bottoming, like back over here. It looked like it wanted to bottom out and rally, and even just a couple of days ago, and here it is today, reprobing the lows. And I suppose that when I look at this chart, I think to myself that, yeah, if I was looking to speculate on, and there's lots of them. I mean, there's just tons of these things out there that have been destroyed, and there's some potential here. There's obviously some potential to bottom fish in some of these things, but every time, the thing of it is that when you do try and bottom fish, you have to do it kind of in a mechanical type fashion, right? So it's worth keeping an eye on. So I would say, over 20, if this thing can curl up and close over $20, you could probably get a pretty decent rally out of it. But over the years, I've learned that stocks that are in uptrends and going higher tend to stay in uptrends and keep going higher, and vice versa. So these broken stocks that, and here's the other thing. When I look at something like this, the other thing I think of is this. The markets themselves, right? Like the markets themselves are right up at the all-time highs, and so what happens is you get a bounce in some of these broken stocks, and if the market sells off, I just don't see how they're going to, if the overall market, right, if all the indexes decide that they're gonna sell off, I don't see how those particular stocks are gonna buck the trend. I mean, maybe temporarily, and obviously you could get a trade out of them, but I would just I would advise against bottom fishing some of this stuff, except for very short term trading, and definitely, basically any stock is tradable if you can identify an entry point and put a stop at the recent low. Right? So let's see, something else I was looking at here. Tan. This is another example of, so this is the Solar ETF. Look at this move, just a parabolic move off the lows, and then of course a really tough entire year. And so this is probably a decent example of, how the indexes can have a spectacular year, but an entire sector, right, and something, that you would think. I mean, you think solar, green energy, the administration, all the climate change stuff and all that. I mean, if you thought about it rationally, you would think that last year would have been a great year for solar, but it wasn't. And so, just like sort of like the arc or whatever, it's got a similar sort of pattern where it peaked early in the year. It was looking extremely sketchy here, right? So extremely sketchy. And it may find some support here, and turn up. But then again, there's nothing about this chart that is particularly bullish. You can see there's plenty of other times where you think it might have bottomed out and is going to turn higher, and it does for a period of time, right? I mean, it has these run-ups, but they're short-lived. So it'll be interesting. But all I can think of is that with the indexes basically up at the highs, right? The Qs are up at the highs, S&P's up at the highs, right up at the highs. Real quick, let's look at the Russell here, because the Russell's getting a little bit of buying in the new year here. So this is, quite frankly, this is an amazing consolidation. I mean, you're talking, 11 months sort of in a sideways range, and this sort of false breakout and a move all the way back to the low of the range, just incredible for an index of 2,000 stocks. So interestingly enough, the price action as we speak here is like right, the 200-day and the 50-day, and the price action's like right in here. So I need to move my little box over a little bit. There we go. And of course, it's not, obviously it's not perfect, but there we go. Russell 2000. Yeah, it gives a little bit better look at it, but so it'd be kind of interesting to see what happens here. You got kind of a little W pattern working here. It looks like that gap has been filled. And so with the three major indexes right up at the highs, it'll be interesting to see if they decide to sell off a little bit, what happens with the Russell, right? But this is I always say that the Russell 2000 is probably the most representative of your average stock out there. So we'll see what happens with it. I mean, it can have spectacular percent moves, and this consolidation, they say, whoops, I didn't mean to do that. They say that the longer something consolidates, the bigger the move that comes, when it breaks out. So I will bet that a lot of money chased this breakout here, only to see it fade all the way back down into the lower portion of the box. Well, so now it's above the middle portion of the box. So just fascinating. But anyway, so yeah, we got two open trades right now. I would expect more to hit the pending list anytime. So we'll just keep our eye on things and see how they play out. And I will see you back here, same time next week.